Okay, good afternoon, everybody. Let's go ahead and get started. I want to welcome you guys here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's had a fantastic afternoon so far. Looking forward to this webinar. Got a good to see you, Lauren. And also want to give a shout out to those of you who are watching this in the recording through the website. Want to say hello to you guys. Also want to say hello to everybody watching this on YouTube. Want to show you some things that I've been back testing and trading with as far as the sentiment index goes, which I'm really excited to share with you guys. So we'll keep it a short and sweet webinar. We did talk a lot about this last week. I just want to give a little bit of a recap and go over some of the things that I'm doing personally while we wait for the COT report to get back online again. So I think that'll be good. It's not, no, it's a, yeah, it's funny. I am wearing red. But it's a Tabasco shirt. There's like a hoodie. So anyway, no, I was wearing blue all weekend. So, you know, just today it's wearing red, but not the red you're thinking of. So that's so funny. Okay, as always, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your contract size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, let's go ahead and review the rules of the sentiment index and how to trade that. So let me actually pull up. Um, oh yeah, how about those Hoosers? Yeah, crazy. I'll wear red for the Hoosers. I'd do that. Yeah, they wear red, right? Or is it more crimson or maroon? Like what? I don't. Is it just red? Is that the color? Red and white. So yeah, it's crazy to watch those guys right now. It's kind of legendary stuff. And then they just signed Kurt Signetti till 2033. I just saw that, which is crazy. You know, he's going to be there for a while. And I think his buyout's like some absurd number, like 93 or 94 million dollars. So it's like guaranteed. So he isn't going anywhere. That's for sure. So kind of crazy. All right, guys. So let's go ahead and jump into this. Let me pull up the. Okay, so let's start with this. So I want to review the traditional rules that I've shared with you guys as far as the sentiment index goes. So basically, it's a trade that you take every single night. You pull up the scanner or any other sentiment index. You don't have to use the scanner necessarily. You can use one, like for those of you who are watching this on YouTube, you can just Google search Forex sentiment index and use any one that you find. I don't care which one you use. They often show the same data. So what we've been doing is we've been taking the most biased currency pair right now on the scanner that's showing the euro franc. There's a couple of currency pairs loading right now. It's too bad. Let me see if I can get this to refresh. See if we can get more currency pairs to pop up here as loaded. And then I'll show you how to do this. Okay, let's see if I can get more. Yep, they're all loaded now. Okay, so the number one currency pair on here, I got the CAD franc at 92% biased. And what you would do is you would basically take the most biased currency pair and you would basically trade with the retail trader when it would get super biased. So right now, like the CAD franc, that'd be a strong buy. and you would basically take that trade in that direction. So you would pull up the CAD franc and you would be looking for a buy in that direction. And then what we're doing is every half an average daily range every night, you're spacing these trades at a half an average daily range. So if you look at the scanner, it tells you what that is. So it's got 40 pips as the average daily range. So half that would be 20 on the CAD franc. And then, 20 pips away, approximately right there, you would add another buy, and then you'd have a final buy position, another half an average daily range away. And basically, you would have a buy stop order. Let me go ahead and type this out, buy stop. And then you'd have another, oops, that's not what I want, another buy stop that would be placed just directly above that. And then this other order down here, this would be a buy market. So you're just taking the trade at the current price. We're not adding to losing trades. We don't ever add to losing trades. It's really important that we get through that concept. I know a lot of people do that. We do not, and we will not even get close to doing that. So No, we are all about adding to winners, holding on to winners, cutting losses. That's the name of the game. That's how you get profitable in trading. So what this does here is if the market decides to go straight up overnight, you're going to make a bunch of money if that thing goes straight up. If it decides to go down, you will lose money, but fortunately you only lose, so much. We've got right now an average daily range stop loss. So if that's 40 pips away, let's go ahead and measure that. 40 pips is like right down there. So you'd have an average daily range stop loss, and that would and then you do that for each trade. So this trade has a stop loss that's 40 pips away right here. And then the second buy stop order would have a stop loss that's also 40 pips away from that price, which would be approximately right here. And then you have a third and final order that could potentially trigger if the market goes in our favor, and it would stop out an average daily range right here at this market price. Okay. So that's the whole idea is you make a bunch of money if the market breaks out, and you lose little if the market doesn't. And a lot of the times the market won't. Like I know we wish for breakouts every day, but there's a lot of days where the market just doesn't break out. And that's okay. I did get a pretty nice little win. I think it was on the NZD Frank on Friday. When I set up this position, it was on Friday. I think like around here, I got into a buy position somewhere down in this area. Not exactly sure where, but I got in on a buy. This was the trade for that day, and then I woke up in the morning to a pretty nice little profit, which was super awesome. I was really happy about that. All three trades had triggered, and we were moving in the right direction. And that was nice to get that win on Friday. So that is the traditional way to do that. And then basically you're going to use the lot size calculator. Let me pull this up. This is, well, not the lot size. This is the matrix. So what you're doing is you're coming in here and you're starting off by risking, zero point 0.5, which is 50,000 units, and that's per trade. And then if you lose money, you go up to 0.75, which would be 75,000 units on the second trade. So basically, the whole point of this, for those of you that are confused what this is the sequence multiplier. And so what we do is we do increase the odds after a losing day. So if the market doesn't go in our favor, let's say you wake up in the morning and you lose money, you'll close that trade at the end of the day and you'll take your loss, but then you'll move on to the next day. And on the next day, you'll risk slightly more. And the whole point of this is to basically make it so that when you hit a winning day, you have the biggest lot size possible on the winning days while taking small losses on the losing days. And the reason why we take only small losses on the losing days is because if the market doesn't go in our favor, let's say the market goes down instead, even though we want to buy, you will lose money. But again, it's not that much because you're not adding to losers. You're only adding if the market goes in your favor. And so what ends up happening is on the winning days, you're usually going to be leveled up in the sequence multiplier. Maybe you're on like day 3, day 4, maybe day 5. And on top of that, the market's giving you some pretty good real estate. So if it's breaking up and you bought right here and you have another buy, let's say right there, and you have another buy right there, you're capturing more real estate. And on top of that real estate, you're also getting more value per pip because your lot size is higher up um, on those subsequent days. So that's the whole point of this is again, make explosive big days, and you will have frequent losing days, but they are going to be very mild. They're going to be very slow. And so that's something we just have to get used to is just most days in the market, you're not going to make money or you're going to make very little. And it's okay to have lots of little winning days, lots of little losing days. That's totally normal, and we need to normalize that. I know a lot of people want to make money every day. In fact, for those of you on YouTube, if you've never heard me say this before, I'm going to say this right now, and I'm going to say this over and over and over again. I've been trading for 13 years, and if you have a daily profit target in trading, you are not a successful trader. Like I promise you, you're not a successful trader. Even if you're successful for like a week or 2 weeks or a couple of months, you're not trading a 6-figure, 7-figure account yet. Yet you're just not. That's the thing. And it's a tough pill to swallow because I know a lot of people kind of grew up with daily profit targets and trading, and trading just doesn't work that way. In order to have like a daily profit target, you'd have to change your strategy up every day. And the reason why is because the market's not the same every day. Every day the market's different. Some days it's a breakout market. Some days it's a consolidation market. Some days it's more of a whipsaw, hard break one way, hard break the other way type of market. And so you're always getting this every day, we're always getting this different type of market condition. And so what we have to do is learn how to handle those conditions rather than adapt to them. Because if you try to adapt every day, and again, adapting is usually considered a good thing. However, the problem is that if you adapt, a lot of people view that as like a change of strategy. Like you're going to just change your system every single day to adapt. But you don't know that. Like the market can go from a breakout market to a whipsaw market in 30 minutes and it'll catch you off sides, right? And so and there's no way to really know that for sure. So what we do know is that the market does go from each market condition at different times. Throughout the month, you're going to have a handful of breakout days. You're going to have a handful of non-breakout days where the market's kind of consolidating, and then you'll have a handful of like sharp whip one ways and sharp whip the other way type of days. And those are basically the two or three different market conditions that you're going to see throughout the month. What I've learned is that most of the money, the easiest way for a retail trader to make money is to go after the breakout days because it's the most straightforward thing. Think about it. The most straightforward thing in the market is if the market were to just go straight up or straight down. That's the easiest way to make money. Now, that happens the least amount of time. Like the market doesn't do that every single day. I would say about 20% of the time, just with any market on any time frame, um, the market's going to be doing that type of, hard break one way, hard break the other way, right? And so most of the time it's not doing that. But that's where all the money is made because of how much, like, if the market's moving that far in that short period of time, there's a lot of money to be made in a very short period of time. That's why the 80% of the time that we trade, we have to be okay with just taking small losses, taking small wins, breaking even. We have to normalize that. We just never want to be in a position where we're losing lots of money. And guess what? If you trade like this and you use the sequence multiplier and you're only adding to winning trades, guess what? You're not going to lose that much money on the losing days. You're just not. You're not going to lose that much. And that's the beautiful thing about it. And then when that 20% of the time, when the market finally breaks out hard and you get that perfect world scenario, which does happen, by the way, and the market breaks out nicely, it's just like amazing, right? It's amazing when that happens, right? And so every strategy we trade is like this. You got the weekly trades from the scanner. We make money, we thrive on breakouts. Even the overnight strategy thrives on a breakout. The sentiment strategy, this thrives on a breakout trade, right? So I think what happens, this, by the way, this for those of you on YouTube, please hear this one out because I know a lot of folks on YouTube are probably like, you know what, I'm a scalp trader by nature and I take a lot of trades every day. Here's the big issue that I've noticed with traders who trade like that. What happens is if you have a day where the market's kind of going sideways, just kind of like, let me give you an example of this on the chart here. Let's say the market's just kind of going sideways right here, right? And so that's really easy for a scalper to make money in something like that because all you got to do is just buy it when it comes down, sell it when it goes up, buy it when it comes down, sell it when it goes up. And you just do that over and over and over again. And it's really easy to do that because 80% of the time the market's doing something like this. So it's actually really easy to make money on that. The problem with scalpers is that when this market condition comes along, which inevitably comes along, you get this huge breakout, right? They're not prepared for it because they were used to, buying at the top or excuse me, buying at the bottom, selling at the top, buying at the bottom, selling at the top. And it was just easy, easy money. And all of a sudden, this type of market condition comes along. And what happens is they just totally get wiped out because they weren't prepared for this. Usually, when you're getting this type of market condition, it's easy to think that that's just how the market is. And so, what happens to a lot of retail traders is they go out and they kind of move their stop losses because they're just winning like all their trades. I mean, I know traders who scalp who literally have 100% win rate days. Like they just don't lose any money in a day, and it's actually it's to their downfall. It's to their detriment because when the market condition changes, all the money they made during this consolidation period is completely wiped out when the market takes off either direction. Because what happens is they're used to buying when it comes down, and so they buy down here when it gets back down to this low, and they're thinking, yeah, I'm getting a pretty good buy because it's back as support. Little do they know that the market's just going to continue to plummet, right? And then they just lose a ton of money on that. And usually, what happens with a lot of scalpers is because they add to losing trades. I know a lot of traders that kind of do like this machine gun approach where they like buy down here and then they see it going down and they buy a little bit more and then they buy a little bit more. Problem is that usually traders who trade like this get such big positions by the time the market bottoms out that they usually blow up. Like their accounts will just kind of fall apart and they can't handle the stress or the maintenance of that type of level of margin or leverage, and their account just blows up. And so I traded that way for years. And unfortunately, it never led to me getting a six-figure account. It never led to me getting $1 million in trading capital. So I had to completely change my view of the market. And now my view is now I really don't care about these consolidation periods. And I'll even lose money and I'll happily lose money in these periods just to get through them so that when the market breaks out, I can absolutely just come away with these huge, huge wins, right? And so I challenge you guys to think that through, give it some thought because um, most traders just really never make it. If you think about it, 80 to 90%, probably closer to 90% of traders will eventually just throw in the towel. And by the way, I've thrown in the towel multiple times, especially in my first 4 to 6 years trading. I would say I was just like, I would trade really, really well. I was doing exactly what I just showed you guys for a little while, and then it would obviously blow up on me. And then I'd quit trading for a few months, and then I'd come back and I'd do it all over again, quit trading for a few months, come back. And fortunately, I got so tired of losing that I was like, okay, I need to figure out something different. And that's when I learned, hey, it's all about capturing breakouts. It's all about getting real estate in the market. Another thing that I'll just tell you too, with a lot of traders who have daily profit targets. So I know, like you know how I mentioned earlier, a lot of traders have daily profit targets. What's the problem with a daily profit target? Well, what happens if you hit your daily profit target on a really good day within 5 minutes? Or you hit it within 20 minutes and you're done. A lot of traders will just give up. They'll be like, "Oh, well, I already hit my profit target." It's almost like they think that they're so successful because they're like, "I hit my daily profit target. I'm 20 minutes and I'm done." When in reality, what if that trade that you took could double, triple, quadruple by the end of the day if you were to just hold on to your winning trade? And retail traders will never know that a trade could do that because they're always just taking profits as soon as they see a profit. As soon as they hit a daily profit target, they just take the profit target and they're done. And they never get to see the potential that the market has in store because the market really does have days where things just run the table. And they never know that or they never get to experience it because they're constantly taking profits.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve's Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
It's I don't know if I feel like I just like it's hard because I feel like they'll never like they have to experience it to realize it because the problem is that the market does reward you for taking profits and it is a problem. Like it's an actual problem that like traders are reinforced to do something bad just because they're taking profits all the time. And in reality, you'll make a lot more money when you hang on to winning trades. So yep. I mean, that's how it was last week on Friday. I caught this move on Friday and, I lost money most days last week, just little win, little loss, little win, little loss. And then Friday, everything just comes together, get triggered in all three trades at a higher multiplier. Boom. Money's made. Money's in the bank at that point. So, all right. So let me show you some other things that I've been doing. If you guys, unless you guys have other questions, let me know. I'm trying to like nail that concept like hard because I feel like a lot of people are never going to get that. But yeah, so and then and just in recap before I move on, just that the way to successful trading is always through three things: adding to winning trades. It's always through cutting losses accurately and quickly. And it's also through holding on to winners longer than your average loser. Those are the three ingredients to profitable trading. And it's been proven statistically. That's why I know when a trader's lying to me. And I've been trading for 13 years, so I definitely know my way around this. Uh, if you don't do, if you do the opposite of those three things, even just one of those three things, your demise is imminent. Like you will eventually fail. So if you ever notice somebody on social media who's adding to losing trades, they are absolutely a losing trader. Like they might find a way to disguise it from you. They might find ways to not show you the reality behind things and they might manipulate you. But if somebody's adding to losing trades and it's part of their formula, it's been proven that they are lying to you. So I just want to put that out there. And also, if a trader doesn't have a good use of a stop loss, if they call it some kind of like firewall, or if they call it some like runaway stop loss where they don't really use it, it's only there just to have it type of thing, but they don't actually employ that stop loss as part of their trading weaponry, they're also lying to you, right? And you can also tell if you're lying to yourself if you do one of these three things. And then the other thing is if they're constantly taking profits quickly and they're not holding on to winning trades longer than their average losing trade. Like if you see a trader who's constantly nursing back to health losers, or they're trying to protect losses by not taking them, then they're also lying to you as well. So you only have to do one of those three things. But if you're doing all three of them or two of the three, then you're definitely on the fast track to losses. And again, the reason why a lot of people don't do that is because it's really hard. It's really hard to do the opposite of those three things because the opposite of those three things are add to winners. That's a hard thing to do. It is hard. Another hard thing is using a stop loss accurately. A lot of people don't want to use a stop loss because it's painful to use a stop loss. because we think that the banks are after us or something like that. And so we just think, well, we'll just outsmart the banks by not using one. And then the other thing that's hard is holding on to a winner. If when you're new to trading, especially, it's hard to look at a winning trade and see the money that's actually sitting there that you've earned and then want to take that profit. We all want to do it. But the way to successful long term trading is by letting those winners run, to be honest, as far as they possibly can go, even at the risk of them pulling back and letting them go. And again, all three of those things are really tough, but you got to do all three of them. So that's why you got to have a system, something you believe in, something that you can do over and over and over again that's repeatable that allows you to do all three of those things. Let me show you something that I'm doing. So I'm testing out something right now. So one of the things that I'm doing right now is I'm taking the top. This is different from what I just showed you guys. I'm taking the top 5 trades that are between 80 and 90% biased. Okay, so these ones they're not in like the overcrowded territory where they're like between 91 to 100% biased. I'm talking about the ones kind of in a sweet spot between like 80 and 90. So something like this, let's hover over this. This is the Aussie franc. It's at 87%. We got silver that's at 74. Let's look the other way. Here is franc yen at 84%, Aussie kiwi at 81. This one's at 79, not quite there. Let's see, what else do I have here? Okay, pound franc's now finally at 89%. NZD francs at 89. Those yesterday those were above 90, but today they're between 80 and 90. So what I'm doing is I'm trying to find stuff between that 80 90% range, taking just my top 5 trades. I don't care which ones you take. And what I'm doing is I'm just taking a simple transaction. So I'm using the sequence multiplier for my lot sizing. So I'll just start, if I have a 100K account, I'll just start at zero point 0.5 lots. And then if I have a losing day the next day, I'll move up to 0.75. Then if I have another losing day, I'll move up to 1.12. So that makes it easy. So let me show you kind of what I've been doing. Let me do a demo. And so this is actually simpler than the other method I was showing you guys. So what I'm doing here is actually I have a trade on this pair. Let me actually let's do it with a different one. Let's go back to the scanner. Let's do this pound franc. It's at 89% long right now. So what we're going to do is since most retail traders are buying this, we're going to try to sell it. So I'm going to do a pound franc sell. Let's go find the pound franc. And what I do is I'd come in here and hit sell, change it to 50,000 units because that's day one of the multiplier for a 100K account. I don't use a take profit. Very important. We want to let these trades run as far as they possibly can go throughout a 24-hour period. Then we'd hit the stop loss. We'd change the stop loss to about half the average daily range. So if we look at this, the average daily range is 53 pips on the pound franc. So half of that would be like 26 or 27. Let's go with 27. So 27 is half of 53 or approximately half of 53. And then we'd go ahead and click sell. And I'm doing a half an average daily range. I don't think you need to do a full average daily range with this just because I think that's a little extra risk that's not necessary. But the idea behind this is to let these trades run as far as they possibly can go overnight. Let them run in your favor. And then if you wake up the next day, let them run still. I would suggest that you either close them at the New York close or you can run a full 24 hours if you'd like to run them full 24 hours. It's up to you. I'm not going to care really either way. It is kind of up to you what you decide to do on that. But then you would want to do this for 5 pairs. I would just take the top 5 pairs that are between 80 and 90%. Try to leave the ones alone that are above, like, right here. Here's CAD Franc that's at 92. Maybe you leave the Euro franc alone. It's also at 92. Maybe you leave the USD franc alone at 91. Just focus on the ones between 80 and 90. And the reason why that's the sweet spot is because usually those are currency pairs that are still, pushing against retail traders actively, like the market's going against them. And so what we're trying to do is we're trying to trade against the retail trader. We're going the opposite direction of what the retail traders are trying to do. And retail traders are generally not very good at trading, so that's why we want to trade against them. And so, like I said, you would sell this, and if it hits the stop loss, it hits the stop loss. You're done. You got to make sure that you let that hit, um, and then if and then don't add to the loser as well. If you wake up the next day and the trade's gone because it hit the stop loss, just let it lose. If the trade's still active and it's making a bunch of money, let it run until the end of the day. Whether that's the New York close or 24 hours later when you go set up again at night, it's up to you. But make sure that you allow them to run a good amount of time, because if you just wake up the next day and close it because you just feel like closing it, that's not good enough, right? That's not fair to the market. The market can give you a lot more than that in the long run if you let these things go. So you'll become a believer especially for those of you on YouTube who are not members of the program. Um, Give it a try for a month. Okay. I'm not saying, like, here's the thing, because this is the same thing with like working out, which is something that I've been getting into. I've been working on my health a little bit more. It's so easy to start like a workout thing because somebody says, like, hey, if you work out, you can get into shape. But the problem is like, you go work out really hard. You could have like a 3 hour workout and work like a dog and burn 4,000 calories or something like that. And do something and, have an Olympic type day and you're out of shape. And you'll notice no difference in your body shape or size or whatever. Your weight might not even change at all after one day. And the problem is that all these traders want to be like a successful trader and they're like, expect the same thing. They're like, hey, Steve, you said holding on to winning trades longer than losers works. I did it for 2 days and you said it would work. And it's like telling a fitness instructor, hey, I did an Olympic type workout for 2 days in a row and I'm still fat. Right? Like you see how dumb that sounds, right? So it's like please, like this is why I feel like there's almost more hope for people who are out of shape than because like it's actually generally understood that you need to work out to get into shape, right? But like traders don't really have, I feel like there's very few people out there that actually teach good trading concepts. And even some of the most popular trading stuff out there is like infiltrated with all sorts of nonsense, like just total nonsense, right? And so when in reality, like if you think about it, the like getting into shape, like physically, comes down to like what you eat and what you exercise, right? Like when you really put it down to like two things, it's like, okay, most important thing, how you handle the kitchen, what you put in your mouth, that's the most important thing. Then from there, are you getting some kind of form of exercise, right? Like those are the two, like at the end of the day, how you go about doing those two things can be like put together in like so many different ways, but that's the two things that matter when you're trying to get healthy and into shape and stuff like that. It's just like what you put in your mouth and what you exercise. That's it. And in trading, it's like the same thing. Like it doesn't really matter what you trade, like stocks, forex, options, crypto, as long as you are holding on to winning winners longer, cutting losers fast, and adding to winning trades. Like if you do those three things, no matter how you do that, it really doesn't matter. Um, so what matters is having an approach that you can commit to. It's the same thing. Like I've had fitness instructors ask me a question. They're um, like sometimes I'll ask them, when's the best time to work out? Is it in the morning or is it in the afternoon or is it in the evening? You know what the best fitness instructors have told me? They're like, it's when you'll do it. Like if you can commit to do it in the morning because that works for you, then do it in the morning. If the afternoon is better, then do it in the afternoon. If the evening's better, then do it in the evening. It's just when you'll commit to do it. The problem is that like people are like, well, I want to make sure I have the perfect diet or I want to make sure I have the perfect, whatever. And it's like, stop waiting for the perfect conditions. Just take the conditions that you have and and employ the right recipe to that, and it'll work. That's the cool thing about it. So, so anyway, yeah, back to this. Jim asked me a question. Will you add to these dailies? So these ones I'm not adding to necessarily, although you can. I've actually thought about just doing one extra trade and then maybe making that lot size half the size so you're not, over leveraging, top siding that trade too much. But what I'm doing right now is just one trade per currency pair up to five trades. And then what I'm also doing with this is just using the sequence multiplier. So if you have a losing day, you'll come back. Like if you were to lose today with five trades collectively, then the next day you'd come back and move up to, 0.75, which would be 75,000 units. And then if you lost again, you'd move up to 1.12, which would be 112,000 units on a 100K account. So, and then that should get you on track. And then you basically go through that multiplier until you have such a big winning day, until it would basically, through the combination of holding on to that winning trade throughout the entire day, on top of the fact that you've got a bigger lot size, those two things together alone should be enough to cover any losses you've had up to that point with the strategy. Could you add to winners? Yes. If you were to add to winners, I would suggest that you just space them a half an average daily range apart, just like you do with any other system that we trade. I think we'll kind of keep that simple, keep them a half an average daily range apart is the right move. So this is something, again, this is, by the way, this is something new that I'm testing right now while we're trying to wait for COT report data to get released again. So I'm just testing this. Last night I had a pretty good night doing this. Made some money off of some sentiment trades. Specifically, actually, the pound franc was one of the trades I took. I made 31 pips on this last night. This trade I sold basically up here, and now it's down here by the end of the day, which is nice. I haven't closed it yet, but yeah, it's been a good day so far. So one of the things I wanted to do as well is I just want to get everybody in the routine of selling against retail traders, right? So if you look at the scanner, if retail is like, hey, if retail traders are gung ho about, you know, buying something, then we want to sell. If they're big on the like, if we filter this the other way, right over here, you've got, Frank Yen. Most people are selling that right now, and so we want to buy that. We just want to do the opposite of what people are doing. And I would just go with the ones that are between 80 and 90%. By the way, for those of you that are watching this on YouTube or any other place, we actually have a sentiment index that's free. If you go to the website, tradingwithsteve.com/sentiment, or just go to tradingwithsteve.com and then click on free tools, you've got the sentiment index right here. Okay. And you can actually filter over this. Like here's NZD Frank, 91% to 8. See if we can find another one. Here's Frank Yen, 92% to 7. Let's find another. Here's USD Frank. This one would work just fine. 10% short and 89% long. You would just go the opposite of what traders are doing. So you would go short on this one because most people are buyers. That keeps your job pretty simple. So so that's free. Anybody can use that. You don't have to be a member of the program to use that. It's just totally available under the free tools. I just like to use the one that's on the scanner. So if you're a member of the program, just use the one on the scanner. Or if you prefer the free one, you can use the free one. I don't care which one you use. They're all about the same information, same data. So okay, cool. So that's what I'm doing this week is I am taking the top 5 signals from the sentiment index, anything between 80 and 90% preferably. And you want to take a trade using the sequence multiplier for your lot size each day, using a half an average daily range stop loss. Okay. And no take profit. Let the trade run overnight, close it the next day for whatever it's worth. If you had a profitable day, you go back down to the default multiplier. If you had a losing day, you move up to the next step of the multiplier and make money. So, Okay, I think that's about it, guys. I'm gonna go ahead and wrap up. We'll keep it shorter today. If you guys have other questions, let me know, and we can get those answered. But thank you for coming. Have a fantastic rest of your day, and we'll see you guys in the next webinar.